closing trades right here on ET now. The closing trades are pretty stable so far. So seems like we're headed in for a firm close this week, much unlike what we did last week. But the US elections or the recurring virus outbreaks in Europe hasn't impacted the business momentum. That's the word coming in from Infi CEO Salil Parekh. Here's a slice of that exclusive interaction he had with us.
We have not seen any impact today as a consequence of the US election situation or the European the cases increasing situation. I think notwithstanding that, there's always volatility in the numbers quarter on quarter, but our deal pipeline, as we shared when we shared our results, is very strong, and we remain confident that over a period of time we will continue to participate in these large digital transformation programs with our clients.
Okay, let's welcome on board then Rajesh Palviya. He joins in on the show right now from Axis Securities. Rajesh, hi, afternoon. How is it that you're reading into the market move today? While Nifty, of course, has been steady, the good thing is that the broader market catch-up is continuing today as well, and over the week they will overtake the benchmark performance.
Yeah, good afternoon. So today again we have seen consolidation action is going on in terms of indices. Both the indices are trading in very narrow range, very tight range, which we are seeing for the Nifty as well as for the bank Nifty. Nifty is continuously facing a hurdle around 12,000, 12,050 level, which is immediate supply area for the Nifty. And looking at the derivative data also, a lot of call writing activity has been there at 12,000 and 12,100 strike. So looking at the data as well as the technical setup, my belief is that until unless we're not able to cross this 12,000, 12,050 level on a decisive basis, we will see further more consolidation to remain in the market. However, on the lower side, 11,850 is the immediate support area for the Nifty. So till we are holding this 11,850 level, so trend is likely to remain on the buying side, and one should try to buy the stocks which are available near to the support area, and in the volatility try to buy the stocks which are showing good buying interest near to support area. For the bank Nifty, the immediate resistance area which I am seeing on the chart is around 24,650 level, which is immediate supply zone for the bank Nifty. Once we are able to cross this level, then possible next target on the higher side could be 25,200, even 25,500 on the higher side. So trend is positive for both the indices. Buy and dip should be the strategy at the current juncture. For bank Nifty, the immediate support is at around 24,200. So till we are holding this level, one should try to buy the stocks which are available near to the support area.
That's the word coming in right now on how the broader markets have actually been catching up. Let's take it across to Daljit Singh Kohli as well on the show. Daljit, hi, afternoon. What is it that you're making of the market temperament? We've run up quite hard. You've got a big impending event, that's the US elections coming up next in the thick of earnings, and we are unable to react positively because we've already seen price appreciation in IT, pharma, cement and most other pockets.
Yeah, good afternoon. You summed it up very well that we are going into the earnings season with a lot of positivity, and stock prices have already moved so much. So despite the very good performance by most of the companies, we have seen that the reaction has been actually on the negative side. Yesterday's IT results, Coforge or anybody else, we've seen what kind of reaction we had. So I think that is purely because of the market positioning, how the market was positioned before the event. At 12,000, I think there is a bit of consciousness that are we moving far ahead of fundamentals? Is there how much further scope is possible from here to go up? And then there are events of a US presidential election, this fear of second wave and all that. So I think this is all giving that mixed feeling and not allowing it go to either side. What we have also mentioned in our October note, when in the initial part of the month we came out that we expect volatility to increase and this indecisiveness probably to continue for some time, mainly because at one side we have good numbers, but other side we have events and we are already positioned for very high. So there is margin of error is very low for all these companies to perform. Now I think what will take it out from this range, that will be the one that if we have some decisive action on the corona side, meaning some vaccine comes in, something happens there. US election I don't give too much of importance because every election, like anywhere in the world, has a very short-term life. It will probably be a few 1 or 2 days affair. After that, we'll forget about it. We'll come back to fundamentals and all that. So more important will be any clue on the vaccine fund, and then on the stimulus side, which we are talking both at the US level as well as our country domestic level. Government has been giving those hints. Many times they have spoken about that. Unfortunately, last two attempts of stimulus have not been up to the expectation of market participants. This time what they do, we don't know. We will see. So I think probably November also we'll see this kind of indecisiveness. People will remain optimistic, but again at the very short sight of some negative news, there will be a deep cut and suddenly you will see this volatility increasing. As a trader, it may work, but for investors, we will look for those opportunities if there is a dip. If we have to, we can use that for our benefit. So IT, pharma, chemicals, those sectors still remain as it is. So we look for opportunities in those sectors.
She invests her money and a whole lot of other things. We at ET Now stand by the Rise with India philosophy, and today we have someone joining us who does epitomize those words, who has not only risen to great heights, to great fame and success, but has also inspired millions not only across the country or the world, but has also conquered the universe. Please join me and Chandra in welcoming in none other than Sushmita Sen.
Thank you so much for having me, and really looking forward to this conversation.
It's pretty unprecedented the world over, the year 2020. So what were your own learnings from this lockdown? What was perhaps the high point, the low point for you?
A virus like COVID-19 highlights the fact that it has affected and impacted lives on the same level around the globe. So that was a learning. Don't take things for granted, because everything has a point at which it finally has, be that environmental, be that just this essence of people around the world having to fight to balance between an economy and the safety of people. And the end result is here's where we are now. I really think that if we remember it, see what happens is when a calamity hits, usually we get deeply affected by it in the beginning, and then as things start to improve, that's human nature, we forget and we move on until another pandemic hits. So I think it's taken us back to valuing what we have, because now the WHO is saying our world may not, even with a vaccine, go back to normal for a very long time.
There are many things that a lot of us have gone through while we were at home for a large part of this year. One of the key things was the importance of being financially stable. We've seen migrant labor suffer big time. We've seen even many people within the service, within the working classes, small businessmen, everybody across the board getting impacted because of financial instability. You started earning at a very young age. You started bringing in big money quite early on in your career. How have you grown to manage finances, and how important would you say to the viewers as well it is to manage the finances, smartly?
Even before the news started to come in from Wuhan, I pretty much was out of the market. I didn't even want to understand what in the long run. I did not want to be, if at all, I wanted to be in a place where I would buy later because the prices would be down, not be selling in distress, So otherwise I'm a safe investor. I like things that may not get me great returns at all times, but I need to be safe because I have two kids that
Welcome back. We're in conversation with Rajesh Kohli as well as Rajesh Palviya and tracking the markets this week. Still looking good in today's session. We've had quite a few themes that have played out as well over the course of the week. So lots of bright spots from real estate to metals to of course what we've seen on some of the banking names as well. And today auto. That's really where the clear trend has emerged today and continues to look strong as well. Diljit, just looking at some of the other themes, we've got, for example, a power grid that's also looking good in today's session. I know that one's a little off the trending path as such, but will you look at some of those names as well in the utility space?
So actually we follow a strategy where we want to be with the leaders of the market. So we don't want to stay with or we don't look for those opportunities where we might have to stay for a very long time. There may be value there, but we have to wait for that value to play out because that needs a lot of patience, that needs a lot of waiting time is there, and in between there are many things which may happen the other way around. So normally we tend to be with those sectors or stocks which are in the trending side, on the upward side, trending side, and therefore we run a lot of screeners to shortlist the stocks that we want to be in. Unfortunately, these power stocks are not coming anywhere in those lists, mainly because one, that they are very, very slow performers. There is a lot of interference on policy side. Although at every point of time you can argue that they are very good value buys, but somehow they have not played out well. In the past many years they have not given good returns. At least we would like to stay away from this.
Okay, so stay away coming in there on Power Grid from Diljit this afternoon. Okay, we've got Spice share up 8-9%. Kunal, should we take a look at that one? Not sure if there's a trigger as to why we're seeing Spice running up today. Rajesh, pardon me. Let me get your take on a Spice share on the charts.
Yeah, we have seen a very good buying interest today's session for SpiceJet, especially when now stock is trading above 50 level. So looking at the current setup, looking at the near-term and short-term setup, my belief is that if stock continues to trade above 50 level, then another round of buying action we can witness in the SpiceJet towards 58 to 60 level. So that could be the possible target we can see in the near-term basis. So for trading perspective, stop loss, one should adopt a stop loss of 49 to buy this stock at the current juncture for upside target of 58 to 62.
Okay, focus on IT. Let's hear it out from Salil Parekh of Infosys then as to what he's making of the environment for IT going forward.
So there, Chandra, my sense is specifically the areas of digital cloud and the ones within it, for example, data, for example, cyber security, the Internet of Things, the whole area of experience. I think those have a very good growth trajectory. And then it's a function of really how you bring things together with large transformation programs. If we remain committed to our clients and on this focused path of what's relevant for our clients, we see a good future for the coming quarters.
Right, but when you say good future, will this mean double-digit growth of the industry, not just Infosys, will perhaps return to the double-digit growth trajectory from next year?
So there, Chandra, I don't have a good sense of the industry and where that would go. I'll say more specifically for us, if all of our digital investments are focused on what's relevant for clients, gives us good confidence for what's coming in the future. We obviously don't have a commitment or forecast which is beyond the end of this financial year, but overall, given what we see a very good future for the digital transformation work.
Right. And so one thing that has really worked for you and other companies is a favorable offshore on-site mix. Largely because of the travel restrictions, a lot of work has been able to get executed offshore. Do you see this continuing even in a post-vaccine world? How are you seeing the landscape, the business landscape, the delivery landscape changing in a post-vaccine world? Is this model here to stay, the higher offshore model? And the second part of that question, what will this mean for billing rates? Because traditionally, the on-site billing rates have been higher than offshore. So will we see a pressure on billing rates coming in if more and more work continues to happen offshore?
So there again, Chandra, the way we see it is, given the travel restrictions, we had a faster move to that offshore on-site percentage mix. We think that some of that will continue, but some of that will be reduced because travel will open up. And there's always a mix of work which is not driven purely from a margin consideration. It's driven much more from what is required for the digital transformation work with clients. So we do some of the work on-site and some of the work offshore. A little bit of that will move back to on-site. We also have large digital studios in Europe, US, Australia. So those will be the places where some of that work will be done. And then as we move ahead, what that means really in terms of pricing, I think what we saw in Q2 and we shared, the pricing has been relatively stable in Q2, and we don't anticipate any big changes from what we see into the discussions we're having for the foreseeable future.
Okay, right in from Infosys, but let's move on and just 10 minutes left to go before we wind down trade for this week. Holding steady, although you'd have to say in just the last few minutes or so, we've dipped off some of those gains. 11,900 though, still staying. And the breath as well has come off a little bit from the top. Infatel, Biocon, Ambuja, Shree Cement, Coforge, and laggards. You've also got Hindalco, you've got an HCL Technologies, you've got a JSW Steel, Bajaj Finance, Kotak Bank, Axis, Nestle, Cipla, SBI, which is down about 0.5%. These are your laggards in trade. Daljit, not sure if you've spoken about this already, but ancillaries and within autos is where you're seeing maximum traction of late. And the sectoral chance clearly seems to be happening, be it a Bharat Forge, be it a Madison Sumi, and even pure play auto names like an Ashok Leyland, like a Maruti, which is also spurting a good 4% or so. Where do you find comfort within the entire auto recovery theme?
See, auto as a theme has been playing for as a reopening trade kind of thing, because most of the people have understood that probably public transport may not be available for quite some time, or people may not want to use public transport, so they would want to go for personal mobility on these two-wheelers and all and cars. We've seen the numbers also month on month improving. The only apprehension I have about these numbers is that as of now it is difficult to say whether this growth in numbers month on month is coming is because of the pent-up demand or is it actually a structural change in the demand. So we have to wait for maybe another 1 or 2 or 3 months when we will come to know. 3-4 months people have not been spending anything, they were waiting probably, and now then when this opening up starts, they will first thing to go to is to buy a two-wheeler or buy a four-wheeler if they can afford it. So we have seen those numbers, but I don't think that the sustainability of these numbers is little apprehensive. We will wait for some more time. We have not added any auto name as of now in our portfolio. Earlier we had these two-wheeler names, both the names, Bajaj as well as Hero, both of which we have taken the profits out because they moved up very sharply. Auto ancillaries again, because of these OEMs move, then obviously all the ancillaries move. Plus today we have some other policy from government that they want to incentivize more make in India with the smaller components, 56 components they put in that list. Again, so all these small companies will get benefited. So auto ancillaries also hold a lot of promise. We will look for opportunities there. But as of now, we have not added anything in our portfolio, but we have a positive view on the sector.
Okay, that's the word coming in on auto anks, and that clearly seems to be the most definitive trend today. Rajesh, where would you find comfort in initiating a fresh buy, be it in Ashok Leyland, a Maruti, Bharat Forge, or a Motherson Sumi?
Yeah, clearly, if you look at the today's session, the auto and auto ancillary are the clear winning sector for the day. And looking at the momentum, I like, Exide industry from the auto ancillary, and looking at the setup, stock managed to give breakout of the down sloping trend line on the daily chart. And the stock is now, crossing its 50-day as well as 100-day moving average. So looking at the setup, my belief is that, Exide industry can, show some, buying interest from the current level, and the possible target we can witness in the near term basis around 170 to 172. One can buy this stock with stop loss of 158. So this is looking very attractive from auto ancillary space. From auto space, I like Tata Motor. Tata Motor has shown very good rally in last two trading session, and the kind of buying interest, kind of open interest addition we have seen in the stock. My belief is that this stock will continue further more upside momentum in the next coming trading session towards 145. So one can buy Tata Motor also from the automobile sector with stop loss of 133. So these two stocks I like from auto and auto ancillary space. If you permit, I like one more stock from FMCG Tech, that is Dabur. If you look at the setup, stock has corrected in last 2-3 trading session, but stock has taken support from its important support area of 1515. So looking at the buying interest in the today's session, my belief is that stock can rally in the next coming trading session towards 530, even 535 level. One can buy Dabur also as a BTSC trade with stop loss of 510.
Okay, Daljit, if there was, one theme that you feel stood out this week, what would it be? Daljit?
Yes.
If there was one theme that you feel really stood out this week, what would it be?
I think nowadays, because all these major themes, IT and all these has played out, so now people are looking for new ideas, new sectors. So reality is one which has played out very well in the last 1 week. We have seen some big deal happening for DLF, so that was a bit of positive rub-off also there. Overall, talking about selling something to some PE fund and all that, those things. But again, and all these numbers also, overall gave very good numbers on the registration part and on the Godrej properties, all that. So real estate, a lot of stocks have moved up. Cement has shown very good numbers, so cement has moved up. Both of them more or less related and complementary to each other. Unfortunately, as of now, we have no preferences there. Again, mainly because these are all kind of pent-up things which have come up as at one go in 1 month. Many of these state governments have given a lot of stamp duty relaxations and all. Once these things go away, we will see how things pan out. Most of the people as of now, this MPA thing is still not clear. So banks are also not clear what is going to happen on the credit side. we'll have to wait for these things. We are still going where there is a safer, clear visibility of earnings. So those three sectors which will continue.
All right, Diljit, thanks so much for joining us. And let's start taking a look at how we're winding up for the day. It looks like we're still ending a little higher, up about 2 to 3 tenths of a percent. It's looking good. Names like an InfoEdge, Aditya Birla Fashion, Bharat Forge, Apollo Tires, 5, 6, 7% higher, all of these names. Maruti, Mahindra & Mahindra, Ashok Leyland, Tata Motors bringing up the auto pack. Tata Steel up 3% today. We had Vodafone 2.5% there. NTPC Power Grid, another segment that was moving, and then minor gains in the likes of an ITC, Tech Mahindra, Shriram Transport, and an Asian Paints. So overall, the breadth also seemed pretty decent. Aisha, maybe not a runaway move today, but definitely steady with cuts primarily in the likes of NSBI Cards post earnings, some of the cement names, and HUL also cooling off slightly after numbers earlier this week.
Yeah, absolutely. That's the word on FMCG. We've come off a little bit from the top, so really that's the only takeaway, and that's been the case with the market breadth as well. Having said that, for the week, we've managed to put on a good show. Almost about 1.5% kind of gains is what we're headed in for, and about a 4.5% move coming in for the Nifty Mid-Cap Index as well. Today, of course, the defining trend has been autos, but over the week, metals has really shown strong. So if you look at the over the week performance of a Tata Steel, of a Hindalco, across categories, ferrous as well as non-ferrous, you will see some good gains coming in. JSW Steel, Jindal Steel, these have been all the other stocks which have held out very, very smartly. ITC today though goes home a winner, about 1.25% higher. M&M as well has made a dash. We've also got a power grade, Tata Motors, which has managed to hold out. Bajaj Auto as well has seen a solid show of about 3%. So all in all, autos was the one story which really sprung up in trade today. Idea has been very actively traded, although it goes home with a tempered 1.25% kind of move. Innocent Bank has seen OI build up, 0.7% loss. Amara Raja Batteries, 1.5% higher. Coforge, excellent set of numbers, 37% OI build up, 4.25% loss in the stock. And then even Jindal Steel today has seen some ebb off of the moves, about 1.6% lower is where it's shut shop for the day. But done with the week, Rajesh, what's been your takeaway from the week gone by, and sectorally or in terms of any stock specific trends, what would you be watching out for in the week ahead?
So the weekly closing is, on the positive note only, and if you look at both the indices, Nifty managed to close above 11,900 and Nifty also closed about 24,200. So for me, both the indices are in the positive territory, and looking at the setup and the kind of sectoral rotation which we have seen throughout the week, which is giving some sort of indication that going ahead we will see a breakout which is still everybody is waiting for 12,000 level breakout on the Nifty. So maybe in the next week we are going to see a breakout of the 12,000 level, and we may see a decent rally, another round of rally in the automobile sector, as well as we can see some buying action from the IT space also, because if you look at the IT sector, IT stocks on the lower side, we have seen decent buying action has been there near to support area. And the third sector which I like from the this week momentum, like metal stocks can further show good momentum in the coming trading session. So from metal stock, I like Tata Steel from the current level, and the kind of rally which we have seen in the Tata Steel in last 3-4 days. My belief is that this stock can further move towards 440, 450 level in the coming trading session. One can go long in the Tata Steel in the next session with stop loss of 410. And another stock I like from the cash segment, that is AU Bank, and the kind of setup which we are seeing on the weekly basis. Stock managed to give breakout of 5-6 week consolidation, and the breakout suggests that this stock can show a good rally in the next coming trading session towards 850 to 860 level. So AU Bank one can buy with stop loss of 770 at the current juncture. So these two stocks I'll recommend for coming trading session.
Okay, gentlemen, we'll leave it at that. Thanks, as always, for walking us through how trade has panned out today, done with the week. We're going to take a very quick break. Come right back.